Welcome back, everyone, to the European VC podcast. Today, we're going to explore a shift that is quietly redefining how Europe builds companies and maybe even how we define ourselves. For the past decade, impact has often sat on the sidelines of venture, important but also a niche. Cameron McLain and the team at Giant Ventures have taken a very different view, that the most valuable companies of the next generation will be built not despite global challenges, but because of them. But recently, that idea has evolved. In their latest thinking, Cameron and the Giant team introduced what they call the European stack, a vision for rebuilding the core infrastructure of Europe across energy, manufacturing, and financial systems, not as public projects, but as venture-scale companies. Not as ideology, but as necessity. So in this conversation, we're going to talk much more about what used to be called impact, but is now being reframed as sovereignty, competitiveness, and whether Europe can actually own the systems we depend on.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
Cameron, let's start at the beginning. Tell me everything about building Giant from the start and how your thesis has evolved from then.
Thanks for having me, by the way, Andreas. It's great to be
Of
here.
course,
Big fan of the podcast. So yeah, we founded Giant back in kind of 2020 with a clear vision that we felt the biggest, most important companies of the next era would be built by solving some of the big, hairy problems that we face as a planet. And we felt that there was a room and need for a venture firm that was hopefully as ambitious, as bold, as connected as some of the venture capitalists on Sand Hill Road, but truly mission driven at its core and very aligned with the underlying missions of the entrepreneurs and the companies they were building. So that was the vision and mission back then. It's the same mission and vision today in many ways, though I guess some of the language we use to describe the problems that the entrepreneurs are going after has evolved, but that really has stayed the same. So what Giant's about is backing giant ideas. We want to partner with truly purpose-driven entrepreneurs who are leveraging frontier technology to build some of the really important systems of civilization. So energy, healthcare infrastructure, the financial rails. And yeah, we endeavor to be the best partner we can be to those entrepreneurs building those companies.
Cameron, I have a word in my script here, which is called impact washing. We are seeing a bit of that and have seen that for a long time. Maybe you can talk a bit about why it's worthwhile building and backing companies with a purpose and it not being a mercenary thing and still not also being impact washing, but actually being meaningful to talk about.
Sure, yeah. I mean, in many ways, we have never used the word impact to describe Giant. We've always used the word purpose-driven. Though we do track the impact of the companies that we back, we would think of ourselves as a purpose-driven venture firm. And I personally think it's an incredibly strong thesis and worldview from which to deploy capital, because in my view and in my experience, the best entrepreneurs are missionaries. They're not opportunists and they're not mercenaries. Though of course you can make money that way, and that has been done. But the people who build the really enduring companies are missionaries. Commitment to that purpose allows them to run through walls where others would stop. I think backing purpose-driven missionaries who have a long-term view, want to solve really hard problems, tackle some of the biggest problems in the biggest markets, are going to build some of the most enduring companies, and they're going to be a real lighthouse for talent. Talent is really what I think separates the good companies from the great companies. But that's the Giant view of what purpose is and how we think about the impact of the companies and the products that we're helping bring to life. I think the Venn diagram of companies that we want to back are those that are going to build huge financial value, but also have really long-standing, deep and wide impact at global scale from the companies that we back. That's why I think we've done a good job.
Yeah. Another defining characteristic of you is that you're transatlantic by nature. You're US and Europe. You invest both places. You're very active in both markets. Can you talk a bit about how that's shaping you?
Sure. So I guess a bit of background on me. I mean, I'm got Californian father, Danish mother, born and raised in the UK, spent about 10 years in the US, and also married a Californian from San Francisco. So I guess those are my influences. I think in some ways the axis and the kind of presence of Giant is very much through the Nordics, through the UK, and then into the US, particularly the coast, New York and California. So I like to think we bring together the best of California optimism, ambition, innovation, the best things that come out of that state, which are truly incredible, and a kind of Nordic perspective on sustainability and long-term thinking and perhaps egalitarianism. And of course, I got to give a shout out to my partner Tommy, who's a full Brit, and so brings a good healthy dose of British stoicism as well. But I think combining the best of those cultures is a very powerful combination. And we've got Swedes on the team, we've got Danes on the team, we've got Americans on the team, we've got South Africans on the team, we've got people from all over Britain on the team, and I think that makes for a very potent combination. But I also think it helps you have a unique perspective on the view. And also, I think our network has been pretty powerful in helping companies scale across the Atlantic. So I think it's been a core part of our who we are. I think some people are sometimes confused as to where we are located, but we're headquartered in London, and I think a lot of the kind of best innovations in across all kinds of different types of activity happen when things collide. So I think we like to think we're kind of colliding those things together.
Yeah. Cameron, I want to ask you a bit, speaking of collision, we're at a very special time in the ecosystem, and you're talking about the European stack in your latest quarterly letter, and we should dive into that. Now you talk about the fusion of Californian roots and Danish/European roots. I'd love to ask you, how do you think about this moment in time that we're in? Because a lot of the people that are talking about things like the European stack and European resilience are at the same time feeling, to me, very anti-American. And I think that's personally, I think it's a pretty unfortunate characteristic, and I think it's not very sustainable. And I think it's also disregarding the nature of venture. But I'd love to hear your take on this, and then we can debate a bit back and forth.
Yeah, I don't take a political view on it. I think America, we've got to take a broad historical view, and over the long history of the last 50 to 100 years, America has been a great ally to Europe. And I'm an American, I'm half American, I hold a US passport. For me, it's not about in any ways being anti-American, and we wouldn't subscribe to that view. But I think it is about building some independence and strength in the European ecosystem so it can be a valuable partner in the world. So that's what, when we're talking about the European stack, European resiliency, that's the framing we take. I think it's important, and as much as is possible, I hope the US and Europe continue to be great allies and great collaborators. But we need to, I think, be realistic about the new geopolitical realities of the world and build for a future that we all want to live in. And I think there's kind of three big things that have changed or have happened in the world that I think kind of are important, at least to our framing of understanding the opportunity from a venture perspective. The first is technology has continued to become more and more of the economic backbone of the world. If you kind of think back 20 years, like there was IT departments, right? People sold into IT budgets, information technology. Technology has become more important economically, geopolitically, and I guess socially to our lives. So the second is, we've moved, I think, from an era of globalization, of very much free trade, to a new era, which who knows how long it will last for, which is more around kind of spheres of influence. That world has changed, right? People are looking to have important elements of, what they view as geopolitical, sovereign stacks being built by themselves, particularly China and the US. And I think the third thing that's happened over the past maybe 5 years is that there's always been a power law in venturing technology. If you look back to Intel and all the way up to Facebook, but I think it's gotten even more intense and extreme over the last couple of years. I think we see that with Anthropic, we see that with SpaceX, and so all of those things kind of tying together means that if you are not building some of the foundational layers of the technology stack, you will not have economic control. And so we've got to have you've got to move to an area of kind of mode of thinking where we were optimizing for efficiency, and now we have to, I think, optimize to some degree for resilience because the rest of the world has done that. So stuff like cloud, payments, energy, AI, if we don't have some skin in the game building some of those foundational elements of the stack, I think it's going to be a tough place to be. And we want Europe to be generating wealth, to be generating value, to be in a position where it can deliver on some of its goals and intent and values.
Yeah. Cameron, you've been a bit of a deep tech firm ever since you started. I'd almost say that you're in a dream position because you've been a deep tech firm before it started getting really sexy and everyone wanted to be, so to say. You're now coming up on Fund 3 to be announced very soon. Tell me a bit about how you've seen deep tech evolve and maybe also you as a firm, how it sets you apart from the generalists that are now moving into deep tech versus a firm like yours that from its get-go, you said this is about the foundational technologies and the heavier types of technologies?
Yeah, I mean, it's funny you said it because I think we never like considered ourselves quote unquote a deep tech firm. I think we just followed where we felt the most exciting entrepreneurs were building. And I noticed about a couple years ago, maybe 5 years ago, that many of the most exciting entrepreneurs were leaning into kind of deep tech spaces. And maybe that's because the problems that they were looking to solve needed deep tech. Maybe it's because software got too easy or less defensible. But we followed the entrepreneurs, and we did make a kind of distinctive decision about 3 or 4 years ago to push into some more frontier tech elements because we felt that's where the opportunities were, and that's where we were getting excited by. So I think it does position us well. I mean, you said it, not me, but I think historically there has been less of that in Europe. It does position Giant well, and I think there is amazing deep tech talent in Europe. I think that's the other thing. Like the technological scientific talent is as strong, if not stronger, in Europe than it is in the US. And so if you can help that talent realize its potential and its commercial opportunity and connect them into US capital markets, I think that's a huge opportunity. But again, I just come back to kind of first principles. We're looking to back purpose-driven entrepreneurs leveraging frontier tech to rebuild systems of civilization, and that's going to involve not necessarily software and moving photo apps. It's going to involve trying to build some pretty complicated things, but there's a great moat when you succeed in that stuff. So I'm really bullish on Europe's potential to build those types of companies. I think ASML is like a great example of that. I think it's an area that Europe can really lean into, and we'll continue backing companies like Cusp AI, AI for materials here in the UK, Matter, sentient factories. I think there's some great stuff going on in Germany as well. So it's an area we're super excited about. And if you are listening and you're a deep tech entrepreneur building in this space, please get in touch and keep us top of mind.
Cameron, now I want to dive a bit into this thesis of the European stack. I'd love to ask you to open that up for us. Tell us a bit about why it's different from just talking about deep tech as an example, or talking just about impact as its own and finance as its own and so on.
Yeah, well, it's sort of what I said. It's if you don't control the stack layers, you're renting your economy to some degree. If you don't own the infrastructure, if we don't have some like skin in the game for energy systems, for control and coordination layers like stable coins and cloud, if we can't produce things, we really are, I guess, at the dependency and whim of others. And if we also don't have some participation in these technology layers that are going to be the predominant drivers of value creation and GDP growth, it's going to be very hard to maintain the welfare system that Europe has today, because what seems to be emerging is that more and more of the GDP of the global economy is going to be driven by these kind of foundational technologies. And so I think it's an exciting opportunity for Europe. I think there's a wake up call, right? But I think it's an exciting opportunity, and Europe's very well positioned.
Let me ask you about a specific type of opportunity that I've had a difficult time wrap my head around, and that is replacing American stack with European stack. Because there's not much innovation or venture innovation in rebuilding AWS on European rails. But on the other hand, it does need money, it does need investment, and it will be a very big opportunity. So maybe that is a venture play. Can you talk a bit about that and tell me how I should be thinking about it?
Yeah, we backed a company called Evrock. We're invested there, which is endeavoring to build the sovereign stack, cloud stack for Europe. And there's some other companies doing exciting stuff in that space. So I don't know, I'd push back on you a little bit that there's no innovation there. AWS obviously is a great product, but it was built 20 years ago. So I think reimagining the cloud to be truly AI first is happening right now. And there are some companies doing that. It's obviously one of the biggest markets in the world, and I think is only going to continue to grow, right, as more and more things come online. So I think the way I take that view is I think it is a venture scale opportunity. You're obviously tackling a established market, which comes with its own challenges and very well funded and very capable players in the hyperscalers. But I think there is a good portion of the European market which should be on a sovereign stack, because if you don't, you have real vulnerabilities. And that's kind of, probably not acceptable to certain entities, right? Perhaps not to intelligence agencies or key healthcare infrastructure. It doesn't mean everyone in Europe should be moving to a sovereign stack. I think a lot of them will be happy sticking with AWS, but I think there's still an opportunity there.
I knew that with Avrock, and it's a big thing in Denmark that we're trying to weed out all the Microsoft, all the Google stuff, especially Microsoft, obviously. How should people think about it? Like, how do you, because you, as you said now, it is a different thing to be like from being in complete blue ocean, new frontier technology versus going into a market that is heavily owned by the hyperscalers already. How should companies, how should founders building in this space, seeing that there's an opportunity, but also knowing that I'm going up against the biggest guys? How should they think about it? How should investors think about it? How do you yourself?
Well, in the classic startup wisdom and venture wisdom, which I think still holds for the most part, is to find an overlooked niche in a fast-growing market that others don't realize yet is going to be huge. Obviously, this kind of goes against that, and so I think the way you build the company in these kind of sectors does differ from the traditional kind of Paul Graham YC approach, where you find your lean startup and all the rest of it. So I think the advice for people building in established markets is twofold. One, I still think you need to figure out your wedge, even if you are taking on this big end goal. And usually there nearly still is always a wedge where the fast water is moving. And you've got to get in that fast moving water where there is real customer pull and try and figure that out along the way to the bigger vision. I do think if you are tackling some of these bigger players, you do also just need to raise more capital than historically. So I think you've got to raise a very big seed or Series A from the get-go to capitalize the company to be able to build a product which is, at par or very close to it in, your specific segment that you're going after. And I think that is what we're seeing kind of in the broader venture ecosystem these days, right? There is this move to these very large rounds where investors are willing to take that risk of underwriting an unproven product and company with a very big round because they think the outcome is so big, and because people are kind of reverting, I guess, to the idea that capital is a moat. I'm skeptical that capital is a long-term moat for any of these companies, but we seem to go in cycles of believing that, as we do in the blitz scaling era with Uber and Lyft and what have you.
Cameron, everything sovereignty right now is very sexy because there's a lot of pull from the customer side and a lot of also pull from just society seems to be going this way, and for that reason it's sexy to invest in and it's sexy to be building in, and people are also looking to build their careers and doing stuff like that. It's purpose driven for many, so for many it makes a ton of sense to be doing. That also all comes with the fact that there's a lot of government subsidization and government programs to help this movement come along.
Yeah.
Sometimes what you see when that happens is that we end up building leaders that maybe should not be built, or build out segments 100%. That shouldn't be built at all. 100%. How should people navigate that, both as founders and as investors?
Yeah, so I don't think the state should buy. The state should never try to build innovation, in my opinion. They should buy it. Europe has an unfortunate tendency to overregulate and over-coordinate, and that doesn't really work that well. But where the government can play a really phenomenal role is as a buyer of first resort for some of these technologies, and as a regulator to kind of create a fair playing field. I think what the US does very well is the US is very involved as a buyer. So if you look at some of these, obviously SpaceX is a great example, right? Where NASA and the US government was the sole customer for about I think maybe the first 5 or 10 years of the company's existence. And that has now allowed it to deliver its product in a cost-effective way to the commercial market now, and have a huge moat. So that's what I think where government can play an important role, but then making it just easier to build businesses, making it easier for the VC startup ecosystem to take non-linear bets and build companies at scale across Europe, recruit talent. That is the way to do it. We should not be building sovereign companies by government. That I want to be super clear about that. That has never worked from what I know, from my perspective. That is not how innovative, fast-moving, enduring companies are built. But government can play an important role in setting the playing field to create the incentives to go build those companies. I think that's a super important distinction. And whoever has the right people to call in the EU government should make that super clear. But there's obviously a role for it. But yeah.
Well, I asked the question because you do see a lot of investors that are talking about the need to wean off sometimes deep tech founders from public money. because we have such powerful programs in Europe that sometimes founders and teams and entire companies can end up being almost more geared towards the soft funding landscape than the customer side.
Interesting.
And obviously, it's more problematic in some spaces than others. And some would also say it's a characteristic of the founders. And if that is wrong, then like there's nothing you can do, just stay out of it.
I think it's much better if the government is not funding the companies directly, but acting as a buyer of the technology. I think that's the difference, right? And I think probably a lot of what we see in Europe is direct funding. And so that creates, I think, the wrong incentive, because you want to be funded by investors who think you're going to build a huge company, and you want to be joined by employees who think you're going to build a huge company. But the government acting as a buyer of the technology to create demand in the market and allow you to bring the cost curve down, that I think is the right way to go about it. And I think dependency, like that's probably unfortunately a bit of a cultural thing. In the Europe, maybe we see a bit more of like this expectation of support on certain things from the government, but that would be my take. What do you think? Do you think that's the reality? Too much dependency?
I think we're creating it in some places. And I think many of our programs are very complex. So you got to be quite attuned to the soft funding environment to be able to navigate it efficiently. And that's not always the most effective use of resources of a startup. I'm always, like I'm saying, I'm doing a podcast. I'm trying to get the wisdom of investors here. I know that there will be people wanting to pull out my hair that doesn't exist anymore for saying what I just said, because they would say, no, it's been absolutely instrumental to us. And yes, it is in some cases, but I also know a lot of investors that are saying, well, I am seeing a lot of startups that I don't invest in. And where this is the case, that there's a lot of soft funding having gone into it, and it's been an interesting research project, but I can't back it as a financial investor. And those are the companies that I don't think we hear that much from.
Correct.
Because they end up dying, or they end up not really going anywhere. And then you have a lot of successful soft funded businesses that do make it, and then we hear how that soft funding was instrumental to their success, and yes, it was, but you also have a graveyard of companies where the venture community ended up saying, no, we're not interested. You're seeing that with the EIC's program as an example. There's not a very great track record, honestly, on being able to attract the private capital to their public commitment.
Well, I think at the end of the day, you need an incredible entrepreneur to drive the vision to life, right? And without that drive, without the tenacity, the greatest science will probably never be, commercialized into a great company. But I think just one thing important to, and then maybe we move on, but it's I think the early stage is not the issue. I think there's a lot of funding at the early stage, particularly. I think it's at scale, right? It's these large at scale contracts, for instance, in space, again, in the US. These are hundreds of millions of dollars worth of contracts at scale for these companies. And so I think we need to think bigger. We need to think more ambitious. We need to think like, what does this look like at scale? Not necessarily, how do we have 1,000 flowers bloom? Because I think actually we do a pretty good job of that at this point across Europe.
Yeah. Cameron, let me ask you about the pillars of the European stack, so to say. You're pointing specifically at energy manufacturing and digital financial infrastructure.
Yes.
But you don't have LLMs, you don't have space there. Can you talk a bit about like why those three are the hallmarks for you, and as an example, LLMs and space is not?
Sure. I mean, LLMs could have been on there, space could have been on there. I think space is super important, and right now it's entirely dominated by the US and China. Order of priority for Europe, I wouldn't put it number one. LLMs, I think the kind of, that's also pretty obviously could have been on the list. I would say in its current formation, I think we have lost the current LLM race. I think people like Jan LeCun have really exciting different approaches. His world model view, which takes kind of a more cognition-driven approach rather than just kind of a pure statistical approach, may be like a complete game changer. But I would say to some degree, in terms of like the classical LLMs as understood by OpenAI and Anthropic, I think it would be very hard to catch up with them at this point, just in terms of capital, talent, business models. But I think what Europe could do in a pretty exciting way is take some of these open source LLMs and integrate them into kind of the European stack, and that could be pretty interesting, because some of those open source models are almost as strong performative as the closed source models in the US. So that's one extra area. I think also specific applied applications of LLMs. So I think to materials, for instance, I mentioned Cusp AI. Another company we've backed called Zyme is doing something similar for enzymes. I think Europe will really thrive and excel on applied AI for specific verticals, particularly where there's a scientific element, because obviously we've discussed the very strong scientific roots of the continent. But I chose those three because I think of them as the kind of the key input and coordination layers. So energy is energy. I mean, life is energy, right? So without energy, from a economic perspective, there's no economic activity in the modern world. And if we can create clean, abundant energy in Europe at a low cost, I think it would be incredibly stimulative to the economy. And if we can do that internally as a continent, it will be, give us a huge kind of advantage in producing things or in generating the energy needed to run AI models. And I think, as we're seeing with the current geopolitical situation at the moment with Iran, having some degree of internal energy production is incredibly important. And the more it can be self-generated through renewables, all the better, right? All the better for the climate, all the better for the world, but also all the better for our economy and for our resiliency. And I think the focus on energy is only going to increase over the next 10 to 20 years. I mean, the projections of the energy consumption from data centers is astronomical. I think last year 5% of global energy was used by data centers, something like that, and it's set to expand pretty drastically. So we need to have control of our energy production to make things, to be able to drive AI, to be able to drive a clean climate future as well. And I think Europe's really well positioned to do that. We've got one of the largest deployments of renewables globally in terms of solar and wind. And that's fitting pretty well for us. And so we've backed a company called Flower out of Sweden, like many of the climate tech unicorns coming out of Sweden. They built a vertically integrated energy flexibility product. And the idea there is really just to be able to provide clean energy baseload to European companies. And they're doing a fantastic job for seeing that vision. The second sector I described, manufacturing. Well, I think it was Palmer Luckey, the founder and CEO of Anduril, who said, if you don't make things, you don't control them to some degree. And I think there is an element of truth, again, coming back to the original thesis that we spoke about we've had this move from free trade, comparative advantage towards geopolitical spheres of influence. We do need to be able to make things, and I think Europe's incredibly well positioned to do that as well, because we have a fantastic history of manufacturing, whether it's BMW or Siemens or what have you. And so in a world where the form of production is moving to a much more iterative kind of setup where, we've got software at the core, we've got automation taking place, we've got real-time iteration. I think being able to make things will be it's essential. And then the cloud and the kind of underlying stablecoin rails, I consider that kind of the control and coordination layer, because, everything runs pretty much on cloud these days. There's very little in the world that isn't connected. Looking forward 10 years or even 3 years, there'll be very little in the world that isn't intelligent now, where as we move from a world of connection to intelligence, which is kind of always how I think about the transition from the internet era to the AI era. And, if we, again, don't have some control over that control layer, there's a choke point where people can just basically turn you off. And I think stablecoins is something that's not spoken about enough within a lot of circles across Europe, because stablecoins are the future of financial rails, and it's programmable money. It's a very intelligent way to create demand for your currency, demand for your treasuries, and essentially lower your cost of borrowing, right? Because as what stablecoins are backed by is sovereign debt typically. And so as people purchase more of your stable coins, they purchase more of your sovereign debt, the cost of borrowing goes down. Many countries are struggling with their borrowing costs at the moment. So you need your currency to be involved in that mix. So that's why I identified those three as the kind of main categories.
It's a huge paradox that crypto was all the rage and everyone was speaking about it when there was no real application of crypto technology. And then now that it's really the future of everything fintech,
it's a great irony that the technology that was supposed to bring down the sovereign state is now totally co-opted, and the main use case is sovereign currency. So just goes to show how hard it is to predict the future. But yeah, so that's why I chose those three.
Yeah, let me ask you about something when it comes to production, to us starting to use robotics more in manufacturing, because there's a bit of a labor tension here, and you've described it as Europe needs to evaluate its relationship with labor to win in manufacturing.
You're quoting my quarterly letter there, I think.
I thought that was an incredibly succinct way of getting at a very big shift that we probably have to foresee everywhere, not just in Europe, but everywhere. And I think it's one that we're all grappling with kind of talking about, because on the one hand, there's a bunch of people that don't want to talk about it, and for that reason say, nah, it's never going to happen, it's not going to be a problem because it's against their agenda of AI. And then there are a bunch of people that seem to be in the other camp. Where are you on this? Do you think that we will see widespread labor problems because of the shift to autonomous manufacturing? Or is that overblown? We're not going to have that big of a change. We didn't know the majority of the jobs that we work today didn't exist 40 years ago. And for that reason, it's going to be the exact same for the next 40 years.
So my view there is a bit nuanced. I think that in the short term, we are going to see some big labor disruption, because I think the speed at which this technology is improving and the breadth of its applications across the economy, from blue collar work to white collar work, is fairly extraordinary and kind of unseen before. So I think in the short term, we are going to have some issues with that. And I think, unfortunately, particularly, I think for young people, for those who are very entrepreneurial agentic, I think it's probably a golden era. But I think for those who were expecting a more linear career path, it's going to be challenging, because I think people are hiring less at kind of, the kind of starting career point. But I do think in the long term, I'm of the belief that, every technological disruption that we've seen, whether it's the electricity or the steam engine or the internet, has ultimately created lots of new jobs that weren't there before. There was no social media manager before, Facebook and Instagram, for instance. So I think in the long term, we will see new forms of economic, creative human activity that we didn't have before. And I'm positive and bullish on that over the long term. But I do think in the short term, there's going to be a real challenge for governments, for citizens, and we're going to have to talk about that more. I think the way to solve it, from my perspective, and I'm not saying that this is an easy solve, but is to ensure wider ownership in the technology platforms that are creating all the wealth, are creating the disruption, and then try to make sure that's more broadly shared, because I think people react better to shared ownership than I think that's the way to make it a more communal. So I think, at the end of the day, human beings need purpose. We want to get out of bed and go do things. And so I think that needs to be part of the future that we build. And I think there are ways to make sure that happens. To your point, I think historically, I would take the view that looser labor policies are just great for startups, right? I think people should be able to leave companies when they want to go do what they want, to ensure we have as much kind of fluidity in the labor market and creative destruction as possible. That's my view, and I think we don't have enough of that over here. But I think the way to counter that, to counterweight that, is to ensure more ownership of these platforms. If we don't have ownership, there's no profits. If there's no profits for the government or for the broader citizens, there's no tax base, and there's no tax base, there's no redistribution to be had. So that's kind of where I would come back and close the loop again to, I guess, my original thesis at the beginning of the podcast.
I actually want to continue that thinking a little bit, because I want to ask you, if we build the European stack with companies here in Europe that are building for Europe, where do these companies go in the end? Where do they get their follow-on or late round financing? Where do they go public? Where do they sell to, so to say? Who acquires them? And I, of course, ask you about this because inherent in the venture model is that we need to build huge exitable companies. And so far, the majority of our companies have unfortunately either been acquired by US established players, or they have gone public in the US, and then they're by definition no longer European companies. So how do you think about this, the exit landscape? Do you think that we are on a path where our markets can absorb the many new sovereign companies that are being established today? Or do we have a burning platform, so to say, to solve the late stage segment?
I think we have late stage growth capital, in a decent manner now. I think it's much better than when I was, earlier on in my career. We could I think have more. I think we could have more ambitious growth partners in Europe. I think there's still a little bit of a kind of private equity hangover in some of the ways that some investors approach growth investing here in Europe, which isn't necessarily swinging for the fences. But I don't think it's the limiting rate factor now. Unfortunately, I do think, yeah, we need to make big reforms of our public markets to make it much more attractive to entrepreneurs to list here. The LSE has had a massive exodus, right? And that's really unfortunate for the UK. But I think with the right reforms, if you make it competitive, if you make it rational for the entrepreneurs to list in the home market, I think they will. I think there's a desire for many to do so. But if it's so much more attractive to list in the US because the markets are deeper, because they have, they don't have taxes around kind of transactions, then of course those entrepreneurs are going to, most of them, take the rational decision and list in the US. So Europe needs its own flywheel. We need local listings. I think we need pension fund participation. We need retail ownership. And that will allow value creation to happen here and stay here. One example of the counter that's a shame is, you could think of Uber, for instance. Like Uber is a company in Europe and in the UK, which we consumers pay for. We get, good pricing on the taxis, but all of that revenue and income is going back to the US, and then most of the shares in that company are owned by US citizens and not European UK citizens. So I think it needs its own flywheel to ensure that the wealth creation is happening here. But I think it's very manageable, and I think we will see some lighthouse companies, particularly those if they have a sovereign element, that will naturally list in Europe or list in the UK, and I think that will create a really positive flywheel down the stack.
That Uber analogy made me think of Professor Galloway. I imagine that you're following him as well.
I'm a fan, but I don't follow his podcast. What did he say?
No, well, he said exactly what you just said. That like he did a recording from the Tube in London, saying it's pretty remarkable thinking about all the money that is going out. I think he described that he'd spent probably 100K or so over the couple of years, last year's, on just Uber rides. Which then he made the point that all that money has gone to the US, and what if Europe starts to take things home and not bring as many US tech companies here. Cameron, thank you so much for this conversation. I really enjoyed it. This was the first episode that I did after my wife came back home from 2 weeks in the hospital. So I'm really happy I did it with you because I really enjoyed the conversation.
I'm so happy to hear she's all is well.
Yeah, luckily she is. To anyone who enjoyed this conversation, you can hear much more to Cameron and the Giant team because Cameron has their own podcast called Giant Ideas. Am I right?
Yeah, give it a listen. You'll hear all about the giant ideas shaping the world.
Yes,
and the people behind them.
It's both on Spotify, on Apple, all those places. And of course, you can go to giant.vc and also find it there. Cameron, thank you so much. Take care, everyone.
Thanks so much, Andreas.